The horror. Financial markets today. Hey everyone, it's Wolfgang. So today was a pretty chaotic day in the financial markets. By the way, Tension Tamer tea. I recommend this from time to time. I've got nothing to do with this brand. It's Celestial Seasonings. But this tea has B vitamins and herbs, and it gives a great sense of well-being after you've had a cup. There's no caffeine. It doesn't make you jittery. And I recommend this to my friends because it's you can buy this in any supermarket. It gives a great feeling after you've had a cup of it. Especially for days like these, this comes in handy. So there are many different markets, right? The stock market, the bond market, commodities market, the real estate market, the job market. Those are the most familiar markets for all of us. Only one of them was a horror show today for the last couple of days or so, the stock market. So nevertheless, that's had a big impact on a lot of people. And it's interesting because if you look into it, the bond market is actually much larger than the stock market. The bond market has been fairly stable, doesn't fluctuate that much. The stock market was all over the map. So I want to say something about this. The horror show of the stock market over the last little while, if you're close to retirement, today's stock market chaos means that if you're invested in stocks, you will need some time to recover. This assumes that you did not sell. And time will be required to recover. If you didn't sell anything, you didn't lose anything. But bear this in mind if you're near retiring, if you're 5 to 10 years away from retiring, keep in mind that when the stock market has a correction like this, it's going to take time for the stock market to recover. The entire market went lower. The entire market will eventually recover. But if you're close to retirement, just bear in mind that it does take time for that to happen, for the recovery to occur. So and along these lines, if you're tired of the volatility of stocks in the stock market, what are some other choices? Okay, so stocks, we know they're chaotic. Bonds are not chaotic. Bonds are pretty stable. People say that bonds don't have as good a return as stocks. Well, it depends on your perspective. If you have a portion of your net worth invested in stocks and you're fed up with seeing the market drop like it has been over the last few days, bonds are not that chaotic, not that volatile. Real estate also has not been very volatile. The job market, you know, it's being trimmed a little bit, probably because of the economy, partly because of AI. But compared to stocks, the job market follows the economy. Commodities is a speculative market. Very few people should be in the commodities market. You really have to be on your game to put money into commodities. It's very speculative. But instead of investing in stocks, which have been very chaotic, bonds and real estate have not been chaotic. You might want to consider that, especially if you're closer to retirement and if you're fed up with seeing the entire market correct like it has been doing. Okay, so choose bonds and real estate for less chaos. The stock market today, let's just quickly think about what happened today with stocks. The NASDAQ was down hard at some point. The Dow Jones index was also down hard today at some point. But at the end of the day, NASDAQ finished up. Not very much, but it finished up. So very volatile. Big swing down, swings during the middle of the day, and it finished up. It finished higher. Very small up, but a little bit. Better than being down hard. So what is up next for stocks? So if you refer to yesterday's video, Learn Market Risk Control, we said the following. Tariff changes are creating chaos. Now, tariffs, what's happening there is that tariffs are being imposed on a bunch of countries that are not used to it. And because U.S. companies have subsidiaries in other countries, and some U.S. companies actually build products offshore with cheaper labor and then import them, those companies are being affected by tariffs. The tariff changes are causing problems for companies like Nike is a good example. Nike makes most of their tennis shoes for pennies on the dollar compared to what they sell them for. Nike's kind of a victimizing company. They victimize low-wage people in foreign countries. They take the low-wage the product of the low-wage people, and then they sell it for exorbitant prices here in this country. And I find that to be unethical. It would be much better off to make products here in the U.S., price them reasonably. U.S. citizens are then employed and can afford to buy products. If most of the manufacturing is offshore, then the jobs are not here. People don't have the money to buy products, even if the products are very cheap. And in the case of Nike, they're not cheap, right? So in yesterday's video, Learn Market Risk Control, we pointed out tariff changes are creating chaos. That's a big part of why the stock market is volatile. And we said, do not sell stocks and stock ETFs right now. Don't sell them. Again, if you're close to retirement, this is a good lesson. It's going to take time for the market to bounce back. If you needed that money for retirement, it's sort of a warning sign that you should probably redeploy your investments into non-chaotic markets like real estate and bonds, as an example. But the other thing I want to say that we pointed out in yesterday's video is if you buy stocks on margin, a lot of people have been getting wiped out because of the market correcting and falling. When you buy stocks on margin, the way that works is you borrow money from the broker, you buy stocks with the hope that the stocks will go up. When the stocks fall, you have to either give the broker more money or you have to sell the stock and pay off the broker, and you lose everything. So if you're close to retirement or if you're buying stocks on margin, the chaos in the stock market, a lot of people have been getting wiped out. So this is a good reason not to use leverage to buy stocks. Yesterday, we also said, the whole market falls, so the whole market will recover. And what we mean by that is, sometimes a company has a rough time and their individual stock, that company's stock will fall if the company is having problems for some reason. When the entire market of stocks falls, it's more than one company, it's the entire stock market. People are just selling stocks indiscriminately. When that happens, when the entire market of stocks falls, the reverse will happen eventually. The whole market will recover. We said that yesterday. It's very true. It doesn't seem that way now because everything is kind of on the downside. The stock market has fallen quite a bit. So, but here's an example. Before COVID hit, the Dow Jones index was at 28,000. That was before March of 2020. COVID struck here in the U.S. in March of 2020. The Dow was at 28,000. In March of 2020, the government began shutting down the U.S. economy. The Dow fell 10,000 points. All stocks in the Dow fell, not just one or two stocks. The whole market fell down to 18,000. And then the whole market recovered. By November of 2024, the Dow had not only recovered to 28,000, it had gone all the way up to 45,000. So that's what we meant when we said the whole market falls, the whole market will recover. So that's why we say don't sell your stocks or ETFs when the market corrects, because if the whole market fell, the whole market will recover. Okay? So so when is a rational time to buy stocks? When do you know it might be a good time? Now is not the freaking time to buy stocks. This is not a good time to buy stocks. People have said that, okay, so NASDAQ was volatile today and it finished up. That might mean the selling is done with. That's not what it means. We're not even close to having any certainty that the stock market is stable now and will start recovering. And here's why. Tariff changes are ongoing. Not until all tariff issues are settled and have been settled for at least a month. In other words, at some point in the future, we will arrive at a point where all the tariff issues will have been solved a month ago. You should then start looking at stocks and see if people are buying stocks again. And then create a buy list of stocks you might want to buy, quality stocks only, and not on margin, and probably not if you're close to retirement. But not until all tariff issues are in the rearview mirror should you even consider buying stocks. So the rational time to buy stocks, it might not be for another 2 or 3 months, because the negotiations with all these countries that are having tariffs imposed on them have just started. And some of the tariffs have not even gone into action yet. I believe some of them go in force on the 9th of this month, which is 2 days from now, April 9th. So we have not even begun the process of imposing these tariffs. And China's probably going to hold out for a long time. And so China's economy is probably breaking right now, and it's probably going to break severely because the U.S. is probably going to stop buying Chinese goods in a large way because of the tariffs. But the point that I'm trying to make as far as when is a rational time to start buying stocks or to even think about it, this is not the time to catch a falling knife. There's no way stock market volatility is over. I don't care if the NASDAQ goes for another week or two and it seems stable. Wait until all the tariff issues are settled and have been that way for at least a month before you start even thinking about putting new money at risk. Some people have the opinion, if the Dow was at 28,000 and it fell to 18,000, I'm not buying stock until and unless the Dow recovers back from 18 to 28. That was back in 2020. People back in 2020, when the Dow crashed that hard, people got sick of stocks and they said, I'm not putting any more money in the stock market. If the Dow ever recovers to 28,000, I'll think about it, right? Well, the Dow did recover to 28 and it went up to 45,000 by 2024. So some people have a really rational, conservative attitude about stocks when a crash has occurred, like what we've seen now because of the tariffs. So this may not be a bad way to go. You could say to yourself, what was the NASDAQ and the Dow 2 weeks ago before this tariff stuff started hurting the markets? Look at those levels and say to yourself, I'm going to wait until the indexes, the Dow and the NASDAQ, have recovered back to those levels, and then I will start thinking about maybe in the future buying stocks, putting new money into stocks. There's absolutely no reason to put new money at risk until all the tariff issues are settled. I mean, all of them, every last one of them, including China. The amount of chaos that's been going on has not been affecting bonds and real estate. So you could look at real estate type investments or bond investments if you want to put new money to work, but not stocks. So it's been a horror story with the stock market. Hopefully most of you, when you put money in stocks, you have no plans to sell the stocks because you need cash. It's not a bank. The stock market is not a bank. If you need that kind of easy access to money, put the money in the bank. And again, out of all these markets, most of these were stable today, fairly stable. Not the stock market. Stock market's a horror show. It's going to be a horror show until every last tariff issue is behind us, is in history. And that's not going to be for a while. It's going to be at least a month. I would say maybe 2, maybe 3 months. China is going to hold out. I read something this afternoon that the EU, first they were going to cooperate and drop all tariffs to 0. And then they came out and they said, no, we're going to impose 25% tariffs. So there's just too much volatility with the tariffs issue to even think about putting new money to work. And I'm sorry if you guys are affected by the stock market, but there are other markets, and hopefully you're diversified. If you watched yesterday's video, Learn Market Risk Control, you should watch that, because we present a way to stop one market from creating headaches in your life. This video from yesterday explains how to invest in a way that does not allow any one particular market to create big problems for you. So I'd recommend watching that one if you haven't seen that one. If you have any questions about this, I'd be willing to answer questions. You can please post those in the comments, and I'll get to those. And I really want to thank everyone for watching. I wish everyone the best. And check out this tea, no caffeine, B vitamins, great herbs. It gives a great sense of well-being after just 1 cup. It's a great product. I wish you all the best, and thank everyone for watching, and have a great day.